So, we're going to go over today how to prepare for the worst. No, this is not a bear market. Common sense. Hi everyone, welcome to the channel. If you're new, subscribe, hit the bell button, leave a like. It majorly helps, especially if you slap that like button. Even if you're not here very often, just hit the like button. Let's see how many we can get and let's see if we can trigger something, because let's talk about preparing for the worst. Now, risk management, important. Knowing when to get out of a position is very, very important. Knowing how to get set up is very, very important. We're going to cover all of those bases today, and we'll look through certain things. We'll talk about certain things, mainly go onto the screen and look at some situations that you can kind of look at in terms of why you should be doing certain things. Now, there's two different caveats to this, obviously. You've got an investor, which you are putting your money onto a exchange, and yeah, you are then most likely moving it off an exchange into cold storage, and you're leaving it, you're letting it grow. So whether that is Bitcoin, Ethereum, Polkadot, whatever it may be, right? But that's the thing. That's an investment. That's a bit different. Now, then you've got the trading mentality. The trading mentality is stop losses, moving money around, being able to take advantage of certain things. It's important to do that, but also knowing when to cut your losses. This is where it gets a bit of a grey area, because I see a lot of investors that will not move money onto a cold storage platform, will utilize stop losses, get wicked out all the time and lose positions because they are not preparing for the future. Which is why we're going to go for preparing for the worst situation, being able to cut losses, being able to divide up your portfolio from investments into trading opportunities or positional holds, where you're looking to maybe accumulate, which is also important. But the one thing that I've seen a lot is everyone's talking about up only, but realistically also every single altcoin you've invested in is either gone up or down. Sometimes in hype you get it at the top and it will correct. No matter how good the asset is on paper, hype will eventually kill it. Look at Cardano as a great example there. You know, realistically, how much has that dropped? There's a load of coins out there that have dropped massively, and you're now probably thinking, maybe watching this video going, should I cut my position? So we're going to talk about a few little situations that you can do, and I'm hoping this video helps you, because I think no one's talking about this just yet. So let's talk about some basics. Right now, what you need to do preparing for the worst is always having some sort of equity that you can utilize, right? Profit. If you've got profit, life is a bit easy. So when you're looking at BTC here, you can be like, right, looking a bit toppy here. Even at this rejection here, you might go, oh, might take something off the table here. Now that's the important thing, taking money off the table. You don't want to be overexposed. Most people are, right? So when we talk about preparing for the worst, we're looking to sell peaks and then hopefully utilize that equity for a rainy day. Whether you're going to put that into a yield platform to earn a bit of passive income, whether you are going to essentially rebuy and accumulate more. But people always wait until it's unbearable to sell. Now, there's only one situation that you can do that, and it is right to do so, is if you are looking to basically mitigate some tax, right? So let me explain. So on my Patreon, I stated that I've sold 2 of my projects for tax losses. For that purpose alone, I took profit, on one of them ages ago, was just sitting on a moonbag. I knew the transaction that I could utilize, I could then sell, and therefore, I know not everyone pays taxes, I know every country is different, but sometimes it's okay to cut losses to stop you from paying further tax. You can write it off essentially, right? Which isn't a bad thing, especially a part of it. Now, when we start talking about preparing for the worst, this is the thing, we've got to talk about losses, lost positions. What if, right, and I'm going to put this suggestion out right now, what if we don't go up anymore? What about if we are going to go into a bear market? What if, and this is what the market will tell us, the whole market is built on probability. If you are stuck balls deep, 80% of your wealth in one asset, and it's continuously melting, sometimes it's better to just take the loss on the chin and just go, well, fuck. Sometimes you'll find that. Now, let's talk about, and I mentioned it before, Cardano, right? It's looking pretty ugly. And I've said this before, I mentioned it on my Patreon. It could quite easily go to $1. If you're that person buying it around $3, you're probably feeling pretty stupid right now. And yeah, you're probably going, I really wish I didn't buy that. So then you're probably thinking to yourself, well, what do I do? Well, the only thing you can do in this situation is, well, there's two things. You can pray and hope it goes up, or there's another one, it's called dollar cost averaging, preparing for that as well. You need to, essentially, let's just say you did buy roughly around $3, right? And you're down 60% in fiat. The one thing that you do not do is leave it. I know this is going to sound alien to some people, dollar cost averaging, we're going to talk about it, preparing for the worst. You need to average that position down massively, right? So every single time you're buying, and the lower that you buy it, that dollar average purchase that you bought from weeks, months ago, whatever it may be, will get lower. You need to get into a position where it's manageable. That kind of means putting more money on the table. So if you got profit elsewhere, you can take profit and then put it into some of your lost assets. Now, what you could do with this as well, mentioned it before, you can hit the sell button. You can hit the sell button on this asset, right? And go, right, I'm going to write off that 57% loss, for example. And then you can rebuy it lower, right? Now, the caveat to this is, especially in the UK, you cannot then take profit up until a certain point, the new tax year. So what you could do is you can write this one off and go, right, I still like Cardano as an example here. It's a good asset. It's all right. I think it'll do well in the future. However, I'm bleeding right now. You can take that tax loss for your taxation year, especially if you are in that tax bracket. Most people are, because it's been a good market. So you can then write that off in a certain way where it'll offset some of those profits that you've probably declared anyways, right? If you then buy it a bit lower, you've got a better position and then manage it from there. But that's the only way you can do it. Realistically, you've got to be able to put money in. If you're not taking a tax loss, you've got a dollar cost average like hell. Got to get it down. I've done this in the past in the bear market where I've got positions down quite significantly and then it does well. Hindsight's a beautiful thing. But you've got to prepare for it. You've got to prepare for the worst situation, that this market could go absolutely down to the floor. It's happened before with Ethereum. Now let's talk about Ethereum, right? I want to talk about this from ages ago. Where we're going to go? We're going to go all the way down here, boys and girls. I mentioned this before. You've probably seen the video on it. I bought into Ethereum. It melted like hell. I then sold at a loss. I was able to then keep that liquidity in stable currencies until the market was okay to invest. Now, what I used here, I use a moving average. I use a moving average 21 all the time. I think back then I was using the 34, a little bit faster. It's still a Fibonacci number. And I will only buy when we're in support. So for example, here, just to give you an example, if you see on the higher time frames that we are below moving average and it's just melting, and we're just continuously melting, there's no real relief. You don't want to just keep dollar cost average. You want to wait and find a support. And you can see here, we actually did find a support eventually and a consolidation. You only buy consolidations. You don't buy the downtrend because you will continuously just keep bleeding money. Dollar cost averaging is strategic, right? You need to zoom out, you need to look at it, and you need to think risk management. Going back a bit, if you're investing in this market and you don't have any sort of equity that is kind of available for you that you could lose, that's a problem as well. You want to be able to have, assets that you can basically lose, because that's the point of it. You want to be able to have money that is totally okay to go, well, if this goes to zero, it goes to zero. Simple as that. Not many people do. So when people make that 60% loss on an asset and it's money that they can't afford to lose, it's even worse. Then they don't come back to crypto, and then they do not buy into the mentality that you need to buy more to dollar cost average. Now, if you say, for example, you bought at this peak thinking, oh, it's going to go up higher, cool, right? Crack on. But realistically, look at hindsight here. What would you rather do? Buy more at like lower prices and be able to dollar cost average that position from $1,000 down to maybe about $300 potentially, because it went really low, Ethereum. Remember, it went down to like $80 or $90. And again, using the same strategic planning, you can utilize it. And you only buy when it's actual support. You don't buy at resistance. People will be buying here, buy here, buy here. No. You need to buy when it's actual support. Again, this is a buying area here where it's consolidated for a while. Yes, it goes lower, but if you've got an order at $1,000+ potentially, buying at $200 is pretty tasty. And again, look at what happened with Ethereum this year. It doesn't take much to work out that we did eventually start going up and up and up and up, as you can see. So would you rather be sat forever in a wallet? And I know people did this. They sat in wallets and like, I've got $1,000 worth of Ethereum. I bought at $1,000. I got one Ethereum. people are regretting the fact of not buying lower. So preparing for the worst, in a way, you've got to buy to get that dollar cost averaging down. You've got to get it as low as possible, especially on top assets. If you are, in my opinion anyways, buying a shitcoin that you believe will probably not survive, the best is just to cut that position as quickly and as harmless as possible, right? You've got to be able to do that and, basically invest in top solid assets. So if we're thinking about it, it's a 3-step rule, really. It's risk management, number 1. How much money can you afford to put in? Timing is number 2. Are you buying in a correct trend? Are you buying before it gets overvalued? And the next bit is obviously dollar cost averaging. Preparing for the worst is sometimes being able to put money in when it's unbearable, when no one is kind of giving it that kind of, daylight, because it's like, oh, it's gone down so much, it's horrific. What are we going to do now? If you can find those buy orders that no one wants and you are thinking longer term, that is a much better way to increase your wealth long term in a good solid asset, preparing for the worst situation, knowing that you have got money, you've got equity, you've got profit from previous levels, which you have been able to take to use them, or money or equity, whatever, from a job into the market. Do not buy high, let it rot, leave the market, and do not come back when it is then surpassed that previous buy point. Because, oh my God, I know there'll be people in here that's done it. 100%. I know it. I've seen it. I've seen it all before. I've seen people that bought Litecoin at $100. It went down to $20 and now it went to $300. And they're like, why didn't I buy more? Why didn't you? Well, I left the market because I was in losses. It's a lifestyle. This is not a hobby. It is a lifestyle. It is not a thing you do on a whim. It is full on, breathe it life. If you've got money to burn, you're willing to invest, you should stick with the course. There we go. Simple. So preparing for the worst, you need to be able to buy. You need to be able to buy at the lows. You need to be able to take profit. You need to be able to simply manage your own shit. But you've also got to be able to take losses. Cut them as quickly as you can. If it looks horrendous and you can get a tax loss offset on it, go for it. Then rebuy back as low as possible to make money. If you've done the research and you know the asset and it's good, sometimes a bear market will pull the prices down regardless of how good it is. It's just the sentiment. You've just got to get used to it. Sorry, guys.